Hey guys, it's Pilar Newman and welcome back to my channel. In this video, I'm going to share with you my most favorite way to earn a massive amount of passive income, and I'm going to share with you how to become a millionaire investing $6.67 per day. So if you are someone that enjoys waking up every morning to go to Starbucks to purchase a very expensive latte, then this video might have you rethinking that idea. Okay, because if you can go ahead and actually invest that money that you spend on lattes every morning into the stock market because you're going to become a millionaire, well, that might be something that may actually sway you to stop getting those very expensive Starbucks latte. Now, you might be saying, well, that is going to be impossible, $6.67 per day. Well, today I'm going to share with you exactly how you can do that. And I'm opening up one of my many accounts that was just started more so recently, where I'm going to share with you and actually show you on my screen how that is possible and how I've been using a very simple strategy that has been allowing me to get above average returns on my investment. And it's not something that is high risk. It's not something that is crazy. It's something that simply just makes sense. And it's very simple for the everyday person to do. Now, you may also be thinking, well, I understand the stock market, Pilar, but I simply don't want to take 40 or 50 years to become a millionaire. Well, you'll want to pay attention then to the second scenario that I'm going to share with you, which is what this particular account is all about. I'm going to show you how I am able to get above average returns on my investment, how you can do the same thing too, and then how you can go ahead and become a millionaire much faster. So essentially, you can almost buy time with the strategy that I'm going to share with you today, okay? Now, I do the same strategy across multiple accounts. So it's great that this account was actually started a little bit not too long ago. And so I'll be able to open up this account to actually show you exactly what I'm doing. And you can actually see the real returns here, okay? Now, if you want to become a millionaire on $6.67 per day, you have to do what the rich are doing. Now, what the rich are doing is that they are learning how to make money in their sleep. The easiest way to do that and to do it in a hands-off manner is to invest in some sort of a mutual fund. And that would be essentially you putting your money into some sort of a brokerage account, for example, Fidelity, where you have a mutual fund manager handle and take care and look after your money. And generally on mutual funds, especially if we're talking about the S&P 500, that has over 90 years, has over 90 years of information that we can look at. We know that on average, the S&P 500 gets about a 10% annual return rate. Okay, we're going to go off of that number because history shares with us that the S&P 500 annual return on average is 10%. Okay. Now, if you are investing a starting amount of $200, if you have $200 right now, this is what I'm putting into this future value calculator so you can see how you can become a millionaire. You're starting off with $200. Now, if you're starting off very low, that generally means that you need to invest for a longer period of time in order to become a millionaire. So here we're going to say you're investing 40 years. For 40 years, you start off with putting in $200. You are investing in the S&P 500, which we know has an average annual return rate of 10%, and you are going to be putting in $6.67 per day into your new investment account. Now, that comes out to roughly $200 per month. Now, we are looking at this at an annual rate, so your annual contribution to your account at $200 per month is going to be $2,400 for the year. Let's just recap very quickly here in case I lost anyone. You are investing for 40 years. You start off with $200 in your new account. You're investing in the S&P 500, which we know has an average annual return rate of 10%, and you are investing $200 per month, or roughly $6.67 per day into your account, which comes out to $2,400 investment per year that you are adding into your account. Now, let's use the future value calculator to tell us how much we're going to have with this particular scenario in 40 years. As you can see here, in 40 years, you will have a future value of your investment of over $1 million. You will become a millionaire. So if you are 20 years old and you start investing right now and you're putting away $200 per month at a 10% return rate for 40 years, then you will become a millionaire. Now, that would put you at 60 years old, but you might be someone here who's actually a bit older and you're like, hey, that's too long. I don't have 40 years, nor do I want to wait that long to become a millionaire. Let's change the scenario here a bit. And let's say, well, instead of investing then $200 per month in your new account, you want to actually, quote unquote, buy time, and you are going to double your monthly investment in your new account. Instead of putting $200 per month in your investment account, you're going to double it and say, I'm going to put in $400 into my investment account. Let's double this number, because now annually, you're going to be putting in $4,800 into your investment account. Now, for you, that might mean changing your behavior with money. For example, those expensive Starbucks lattes, you might need to say no to those now, right? If you have a car, or you're thinking about buying a car and you are thinking about buying a brand new car with a very expensive lease, you may want to consider then now buying a used car so that you can go ahead and have that additional money to invest in the market. Okay. So this is going to be more, this scenario is also going to revolve around your relationship with money. Can you have the discipline? Do you have the discipline to go ahead and save your money and reinvest it in the markets? Okay. So in this particular scenario, we doubled our monthly investment to $400 per month, which is $4,800 for the year. And as you can see here, now you make over $2 million. So if you want to actually become a millionaire in this particular scenario, it doesn't take you 40 years. Let's actually see how long it would take you. It would take you roughly 33 years. So you essentially cut out 7 years of investing 7 years off of this scenario, because you simply decided to double your monthly investment. Okay, that is one way to go ahead and expedite your process to becoming a millionaire. Now, you can go ahead and use this financial calculator, this future value calculator, to see how much of your investment at an annualized return of 10% is going to get you to become a millionaire. So if you want to change up these numbers because you want to be more aggressive in your savings and putting in your account, in your investment account, then go ahead and use this calculator. Okay. Now, this scenario is for people that literally want passive income, hands off. You don't want to manage your money at all. This scenario is the safe way to go. Simply go ahead, put your money into a mutual account. That can be with Fidelity. You can put your money in the S&P 500 and Vanguard. You can put your money in any mutual fund. And generally, most of them have an annual return of 10%. S&P 500 really is the benchmark that you want to use. Now, what am I doing over here that's actually giving me an above average return? Now, this is something that I've been able to duplicate over multiple accounts with higher amounts of money. Now, this is a smaller account. I'm going to show you how I took this very small account and actually made a great deal of money. Actually, to the point of where for every dollar invested, I'm getting now $1.53 back, okay? Currently at where this account is. That's a huge return. Now, that is not something that I would say to expect, but when you have a bull market, which we currently have now at the time of this recording, this is actually going to be able to help you make even more money. Now, when you have a down market, this scenario is not necessarily going to make you immune to a down market, but what it's going to allow you to do is to actually take advantage of these bull runs And then when you have down period like we all did, right? March of 2020, that's okay. We're still ahead and we're way, way ahead. And we pretty much sit things out and wait for things to kind of recalibrate and start moving back up. Now, let's take a look at this quick account. So this account is a newer account. It was actually started this was actually at the end of August of 2019 at the time. And I'll put all these years here so you can actually see this number doesn't change. It was, at the end of August 2019. Okay. And we are roughly about 18 months in. Now, this account actually for the first 12 months or so, actually more than that, for the first about 15 months, this account simply had an investment of $8,454.31. With that money, a lot of the returns were actually made with that initial investment. Now, if you follow this little blue line, this light blue line, you will see that this investment amount stayed the same. No money was added into this particular account until about January of 2021. Then $2,000 was added into the account. And then in February of 2021, another $1,000 was added to the account. So in total, $11,454.31 was taken out of pocket, put into this account, and today that $11,400 is now $17,630 about 18 months later. Okay. If we go a little further down here, just so that you can actually see what I'm sharing with you is absolutely true. This is a real Fidelity account. And so this is the strategy that I've been using on this account that I'm going to share with you in a second here. But as you can see here, this is what Fidelity shares with us as comparison numbers to the other indexes out there. There's other mutual funds, other indexes, the S&P 500 index, which is the benchmark that everyone uses because it's the main one. It's pretty much a conglomerate of a lot of great companies you're familiar with, like Apple and Alphabet, all these great companies in there. And these are the returns, right? So in a 1 month period, within the last month, the S&P 500 has been able to return about 2.76% of the your investment amount. And my account's been 1.38. Over 3 months, you can see where these numbers really start showing some big disparities, right? And so they just become bigger. And it's simply because of an active management strategy that I've taken on this account. And it's so simple that it's actually going to, it might not even seem so big to you, but now if you want to become a millionaire a little bit faster than in 40 years, this strategy is going to show you how to do it. Now, you do need to have a hands-on approach to this strategy. This is something very, very simple. Let's go over here. That's actually my recording screen. That's not the screen I was looking for. Let's go over here. And over here, I'm going to share with you one very, very simple random stock that I chose at random, guys. This is not a stock that I'm saying buy into or not. I've actually purchased this stock before, sold it, purchased it, sold it. But this is just an example of a stock where I'm going to share with you what I do. Now, I actively manage all of my accounts across various brokerage firms, and this is what I do. It is a very simple thing known in the stock market as buy low, sell high. Now, generally people are saying, well, it makes sense, right? You want to buy low and you can sell high, and that's where you actually make your money. Now, when you're actually putting your money with a mutual manager, let's say, for example, you put your money with Fidelity or any other mutual manager and you say, hey, take care of my money, they're managing so many thousands and hundreds of thousands of accounts that they can't actually look at your account and get in at the best possible prices that make sense, right? Buy low, sell high. So they literally can be buying for you, let's say one of the stocks in their mutual funds is this Jack Henry and Associates stock. Let's say you come in and it is September of 2018 and you say, hey, go ahead and invest my money in one of the stocks in their investment portfolios, Jack Henry, they say, okay, great, we're going to invest your money. And they're buying for you Jack Henry at $160 per share because you came to them in September and whatnot. Well, this is pretty much at the top of the mountain. So you're buying pretty high. It goes all the way down to $123. And you've lost a lot of time, right? You've lost, you lost a considerable amount of time here going down this hill. Now, that's not to say they're not going to make you money, but the reason that a lot of these S&P and indexes give you an average annual return of 10% is because they come in at all sorts of different prices, right? Now, let's say, for example, you want to invest in Apple, Amazon, Alphabet, all these companies that you know of. But here's the thing, when you are actually picking those stocks, investing and actually purchasing those stocks on your own instead of buying into a mutual fund, you can actually decide and determine at what point you want to get in on those stocks, which is exactly what I do. So for example, simple theory, you don't have any tech knowledge. I have no tech knowledge, but I will share with you a very simple tool that I use that helps me. All I do is literally invest in very good companies, companies that I know of, big companies that I'm aware of, nothing crazy, nothing high risk, unless I want to do something like, for example, now I am investing in cannabis, and that has been a pretty good investment so far. But invest in companies that you are aware of and simply buy low. Now, no one knows exactly where that low number is, right? This looks like right here in November 2018, $135 for Jack Henry sounds like a low price, right? It's at the bottom of the hill. But it goes down more. It doesn't matter, right? What you're essentially doing is you're buying time. Look at the time you bought from September of 2018. You didn't buy it there. You bought it in November. You bought yourself a couple of months of time, right? If you had bought from the top, you're losing a couple of months where that money could have been growing. You could have had the money somewhere else. But it kept going down. It's fine. Now, you can buy any stock that you are aware of and you're familiar with. If you want to go ahead and do some background research on some of these companies, go ahead and do that, but simply buy low. So if it gets down here, you're buying, right? Even if it gets down here, it's down the hill. Now, if you come across a stock that you like, that is a company that is doing well, it's making money, these are not sketchy, high-risk stocks, these are well-known companies, and I will reiterate that, well-known companies, then you simply go ahead and you buy at a lower price than what their high was. Now, where the patience comes in is that even if it continues to go down low, if you didn't buy it at the lowest price, it's okay, it's expected, this is the market. You simply have to have discipline and patience to hold and watch your investment give you that return, especially if you bought a good company, okay? So as you can see here, in March of 2020, the stock markets crashed. Everyone was freaking out, right? Jack Henry was at $172, and this went all the way down to $134. What a lot of people did, because they did not have discipline or patience, was they sold at the bottom of the hill. That's the worst time to sell, right? This is actually a great time to buy. So a lot of people who are savvy investors said, hey, this is a great company. It's just regular market stuff that the stock went down. I'm going to go ahead and buy at the bottom. And guess what? What comes down generally goes back up, and it did, right? So we are in a point at the time that I'm recording this video. We're at March, it's March 11th, 2021. The stock by chance is down again at the top, at the bottom of the mountain. So guess what? This is actually one of the stocks that I'm looking at buying potentially for tomorrow or maybe the next day. And hey, if it goes down to $130, I'm not going to freak out about that. I bought it at the bottom of the hill. No one can actually predict what the bottom of the hill will actually be, but I've saved myself a great deal of time, right? Instead of buying it from August 14th of 2020 at $194. Okay. Now, when it gets back to the top of the hill is generally when I sell, and then I will find another stock that is at the bottom of the hill. I will buy that. And once it gets to the top of the hill, I sell. If this is making sense to you so far, please go ahead, hit that like button. Let me know that this is making sense to you. Okay. None of us can predict exactly what the bottom will be, the exact bottom, or what the exact top will be. But if you are investing in good companies and you buy low and sell high, you will do well. Now, How do I do this without spending an enormous amount of time finding these stocks that are all the way down, buying those good stocks that are all the way down, and selling when they're high? Well, I do use an investment tool. Now, you can go to loudmoneymoves.com/stock picks. Now, this is going to be my affiliate link, by the way, if you go ahead and use this link. But if you go to loudmoneymoves.com/stock picks, it will take you to stockinvest.us, where you are going to be able to get a free trial with this link. Now, that is at the time of this recording. That can all change, so I do want to give you that heads up. But what this tool does, it allows me to actually find stocks that are at the bottom of the hill and then go ahead and assess those stocks. When I say assess those stocks, what I mean is it allows me to go ahead, do outside research on Google, for example, to find out if this is a good stock to purchase, or if this is literally just kind of one of these these stocks that are just kind of, they're just not great stocks, right? There's a lot of stocks out there that are penny stocks and crazy things like that people invest in, and they hope for a miracle, and that's not what you're trying to do. So this is what you do. Once you go to loudmoneymoves.com/stock picks, again, this is my affiliate link. So if you're going through this link, this is my affiliate link. I will get a commission if you do go ahead and purchase the subscription to Stock Invest. Again, I've been using this for 3 years, and I only, recommend things that I either use or know that other people are using. Now, what I do and what I've been doing over all these years to get these above average returns, I go under the Trading Ideas tab. I go over to where it says RSI 21. Again, guys, you don't have to have any technical knowledge. I don't have any technical knowledge. That's not what, this is not what I'm sharing with you here. Now, this is what you'll see if you're a new subscriber. All right. So if you want to go ahead and you want to actually get access to some of these stock picks, and you want to go ahead and create an account and get on a monthly membership with them. Now, this is all I do. What this does, this tab that says RS21, what it does is it takes you to all the stocks that they have in their system that are at the bottom of the hill. So if I were to click on this one, for example, if you don't have an account, you'll see all these ads. You can see here that this takes me to stocks that are at the bottom of the hill. Now, these ads are a little aggravating. Haven't seen those in a while since I do have an account, but it will take you to stocks that are at the bottom of the hill. So now what you want to do here is you want to assess, look up and Google this particular company. Now, a lot of these companies, please be careful with going ahead and investing in them. A lot of these are speculative stocks that literally, these are companies that are not making money, yet some people think they will make money in the future. So these are high risk stocks. I tend to really stay away from a lot of these. I do infrequently do go ahead and invest in some of them that I do a good amount of research in. Okay. What Stock Invest will do also is they will give you their forecast. Now, again, no one can predict the stock market. These are just guidelines and things that are more technical stuff. I just kind of read it to give me an idea. But this, for example, this tool cannot go ahead and tell you whether stock is really going to go up or down. It's going to give you more of a technical assessment. But if you are not a tech person, if you don't have the technicality skills of stock trading, I don't have any technicality skills, then be very careful with this stuff, okay? As you can see here, it tells you the stock lies in the lower part of a very wide and strong rising trend. And then it gives you their prediction. I would not invest in this company. This is a speculative stock from what I understand. I'm pretty sure I've come across this one a couple of times. So you are being able to cut down your time here by having a list in this tool of all these stocks that are at the bottom of the hill. So what I generally do is I will go down these lists and I will look for real companies that make real money that I'm aware of, or I have done a deep dive in and am aware of. I go ahead, I purchase them at the bottom of the hill. I sell them at the top of the hill. Okay. And I repeat that process. So I am always getting in at a fairly good price, knowing exactly that the stock may go down. I'm okay with that because I know that I have a lower risk now because I am buying towards the bottom of the hill, and I have a better chance of now getting up the hill, right? So this one, I'm not sharing with you which stocks to buy or not. This is actually one that is on my stock list at the moment that I am looking at purchasing again at the bottom of the hill and then just holding it until it gets to the top of the hill. And I do believe that this particular stock has a dividend. I look at a lot of different stocks. Anyways, that is how I am able to make some literally serious, good returns on this investment. So if you want to become a millionaire at $6.67 per day investment, you can either go ahead and invest in the S&P 500 with a known return rate of about 10% annual rate. If you want to be more hands-on, then you can go ahead and use the strategy that I shared with you here that has allowed me to grow this account and allowed me to grow across multiple investments accounts at an above average rate for a very, very simple strategy. Guys, if you've enjoyed this video, please do me a favor. Go ahead, hit that like button. If you have any questions, if I can go ahead and answer them for you, I will. And if you are looking for the tool that I use, I will place a link down below in the YouTube descriptions. I'm also going to share with you where you can go ahead and get a free stock. So if you want to get started with investing, I'm going to give you an area that you can go ahead and get a free stock. Otherwise, Fidelity is a great company to have your money in here protected based off of which account that you have. Guys, again, go ahead, hit that like button, subscribe to my channel if this is something that interests you. And if you want to see where this account goes, let me know down below in the YouTube descriptions. If I have enough people that are interested in seeing how this account progresses, then I'll go ahead and I'll record another video in the next few months. But that's only if I get enough people that let me know that, hey, they do want to see how this account progresses. All right, guys, take care. Have a good one. Thanks for watching. Bye-bye.